And welcome into Making Sense. Well, it's the month of April. That always means income tax. And you may be wondering, what can I do to ensure that I've got the most return on the investments that I make and it's not all going to the government? Well, we went right to the source. Brandt McDonald, one of the principals, or I guess you're the managing partner, aren't you?
I'm the president CEO.
President and CEO of McDonald, Barranco, and Hagen Wealth Management.
That's right.
Been in business about 25 years.
26.
26. Oh my
Yep,
gosh.
I know.
You went over that magic 25.
That's right.
I think you'll be around a while.
I hope so.
Well, Brandt, it's tax season, and this is usually the time people say, okay, what am I going to do to make sure I'm going to keep as much as I can?
Yeah, I would say there are a couple of really major points when it comes to this discussion around taxes. Number one is that, I'm always big on talking about balance sheet management. When you talk about institutions, corporations, and small businesses, they all have balance sheets, and they have high-paid professionals like a chief financial officer or an in-house CPA that keeps up with their balance sheets and income statements. Well, you know what? I mean, every individual out there, particularly the people watching the show, we all have our own balance sheets.
That's
and
right.
anytime you make a move on your balance sheet, whether you buy and sell an asset or you're manipulating the liability side of your balance sheet, all of these things are going to impact tax time every time. And so the biggest problem I always find is that people don't really have a great team put together that is communicating with one another. So whether you have a wealth management team, a CPA, or a good attorney, they may all be great professionals and provide really incredible advice, but it's not going to really be that beneficial unless they're all talking to each other.
That's right.
And that's one of the things that we really try to do at our firm when we do this comprehensive wealth management and building out balance sheets and income statements and cash flow statements for our clients. We want to be on the phone with that CPA and we want to say, hey, look, let's do some what-if analysis and let's think this situation through. This is what we see over here in our world. We really feel like we want to de-risk this equity position or this bond position or this real estate holding or whatever it may be. Can we talk with you about the tax implications of that as well so that we can really be on the same page and do a great job for our client? And I think that's where we see a real breakdown for most people. The CPA sees what the financial advisor does and they're scratching their head going, why did they do this? We just threw you into another tax bracket. That's where I think firms like us or others can deliver significant value add service to try to help mitigate tax problems. The second part of that I would really stress is that when you're doing wealth management and really detailed comprehensive planning, certainly there are low-hanging fruit items out there, whether it's retirement accounts, tax-deferred vehicles, other sorts of investments where you can seek non-cash expense items to reduce taxable income, things like depreciation and other types of silent or private investments. All of those are great and wonderful, but they have to be looked at in detail with respect to the client's overall personal situation. And I think sometimes what we see is a client or someone else will say, oh, this is a great tax vehicle, and then they go, oh yeah, that sounds wonderful. But the problem is they really don't know what kind of tax savings they may or may not get until it's really been run through or vetted out, if you will, relative to their balance sheet or their income statement. Because sometimes you find out it's really not as tax advantageous as you thought it might have been. So again, really great items that can be discovered, unearthed, if you will, through a really detailed, comprehensive plan, which is what we kind of pride ourselves on. And I think that those two areas are really the biggest areas when it comes time to thinking about and managing that tax liability.
Well, we appreciate that, and we need to let our viewers know that many of you may not have an attorney that's on staff all the time because you don't really need it, but you probably have somebody that's taking care of some of your wealth management problems, and most of the times you do have an accountant. At least make sure those two guys are on the same page.
Yeah, you
That's
need.
the start of the
well,
team.
I think with most of our clients, the thing that I kind of equate us to is we sort of quarterback the whole thing. you know. And we bring in everyone into one central location to look at the client situation, kind of the hub and spoke mentality. Here's the client in the center, and then they surround themselves with three key professionals: tax attorney and estate, CPA, and wealth management, and we're all working together in concert to make great decisions for the client.
Well, thank you. And just remember, in order to have your taxes be where you want them next year, put the team together this year, and that'll help you to the nth degree. And we'll be right back right after this.